It's the last day of July. Can you believe it? A lot of news. It's almost like we might need an invisible touch. It's your favorite mortgage guy, Steve, here. It is Friday, July 31st. Can you believe tomorrow will be August 1st? Wow. I mean, literally, wow. So, listen, let me jump right in. I'm going to hit you with some questions. Some of these are new questions. We've talked about, can I repair my own credit? Yeah, if you want, try it. Let me know how it goes in about 60 days. Because what's going to happen is your credit score is going to drop. So that repair job that you tried to do worked out real well. Made it worse for you to buy a house. You got to get into a professional program, and I can help you with that. If you've got issues on your credit, here's what I'm going to tell you. First of all, you know if you've got crappy credit. Crappy is a technical term, by the way. You know if you've got crappy credit. You also know it took you some time to get it there. It's okay. Every one of us have had issues with our credit in our life. Something happened, you lost a job, there was a blip, some medical, I don't know, but things happen. Nobody's judging you. But if you want to be a homeowner, you got to call me to let me work you through the dynamics of entering a professional program. If you enter a professional program, here's what's going to happen. They're going to talk to you. They're going to interview you. They're also going to determine how they can help you. Do you want to know that most people that I enter into the program, it's not free. It's $60 a month. It could be more than 60, depending on how bad your credit is. It's not going to be $100 though. But if let's say you have to pay it for 4 months, that's $240 to unflush the credit toilet that you have flushed your credit into. Here's the thing. What I would tell you is call me. Let's talk about it. A conversation, I might be able to tell you how to fix it. But if it's brutal and you want to buy a house, we got to get you to the standard that the loan underwriters will accept. Okay, Steve, I have a ton of equity, but I need to pay off some debt. What do I do? What I've been telling you guys to do for the past year and a half, call me. Let's refinance. Let's get your home equity line of credit. But you know what? If you're going to sit there and badger yourself over this, that, and the other, and your debt, your credit score is going to continue to drop. It's going to make the interest rate worse. Jump on this thing ahead of time. And don't ask me about rates. I mean, honestly, don't ask me about rates. You're going to get a second mortgage rate. You're going to get a home equity line of credit rate. And I don't care if you've got a 2.5, a 3.5, a 4.5, or even a 5.5% loan. It doesn't matter because it doesn't matter. Your credit card debt is 25% interest. I know that. So call me. Let's talk about it. I love this one here. This actually isn't a question. It happened to me earlier in the week where clients called me and the lady literally had the nerve to say to me, well, I went through my GPT. She actually used the word chat and it told me this. And I was like, you know what? I don't think I'm going to be able to help you. She's like, what do you mean? I'm like, if your GPT is smarter than my underwriter, get your loan from your GPT, your chat, your Grok, your Gemini, your whatever it is. She's like, well, I can't get a loan. I said, exactly. So why are you going to a GPT? It's like the old days of Google. I Googled this and it told me that. You know what? I've never done brain surgery. I've never Googled brain surgery. I'm going to trust what my doctor says. I'm not going to trust what the GPT says or the Google, just like you need to trust me as your lender. All right, listen, I'm going to talk more about the debt in just 1 second, but did you know that more than 20% of Americans are spending more than they earn? 20% of Americans. Do you know that's over 70 million people around the nation? Too many people are trying to keep up with the Joneses by buying new cars, running up credit card balances, living beyond their means. Here's the result. The debt's climbing, credit scores are falling, and financial stress is becoming their new normal. Now, here's the thing. What did I just say about who cares what your interest rate is? Don't ask me about rates on second mortgages. You just got to take the loan and just deal with the blow. It's not that bad. If we refinance you, you're going to get a decent rate. If you get a home equity line of credit, they're not that bad. Let's just say they're around 8%. Who cares? 8% that's now tax deductible. And let's say you're paying off $50,000 of debt at 25%. That speaks volumes to what it really means. All right. So my advice on that is just live within your means. Your future self, trust me on this, your future self will thank you. Now let's talk about what's happening in the real mortgage market. So yesterday, the financial news was buzzing after reports that Japan stepped into the currency markets, selling US dollars and buying Japanese yen because of one thing. I'm sorry, I got tongue tied because I'm reading my notes here, and the way I wrote it, I didn't punctuate properly. The yen fell to a 40-year low. Why should we care? Well, Japan is one of the largest foreign holders of U.S. Treasury securities. And if they need additional U.S. dollars for these currency operations, then the concern is they could sell off some of those treasuries, and more treasuries hitting the U.S. markets might mean higher bond yields. We're going to talk about that in a second, but higher bond yields, guess what? Guess what they typically translate into? Yeah, you don't have to guess. You already know. Higher rates. So to add to the uncertainty, Reuters, they reported that U.S. Treasury, working through the Federal Reserve Bank of New York, notified several major banks to be prepared in case additional intervention becomes necessary. It doesn't guarantee further action, but it does tell the policymakers who are paying close attention that the bottom line is market volatility is not helping mortgage rates right now. Guys, all I can tell you is I've been through how many economies? 34 years in the mortgage business. Things are going to work out just fine. Speaking of the Federal Reserve, it was kind of interesting watching CNBC this morning. Steve Leisman questioned whether the new Fed chair, Kevin Warsh, has gotten off to a rocky start, while Rick Santelli, he's my favorite, praised his leadership during the first 6 weeks. So you got two different reporters at the same news network speaking out of both sides of their mouth. So the difference in opinions highlights something. You know what they highlight? The markets have grown and accustomed to the chairs giving plenty of hints about what they're thinking. Kevin Warsh, on the other hand, appears to be taking a different approach. Now, it reminds me of the days back with Alan Greenspan. Now, he recently passed away at the age of 100. God bless that guy. He was awesome. Now, Wall Street used to watch whether Greenspan carried his briefcase into the Federal Reserve building on the Federal Reserve meeting day because they believed it might signal whether interest rates were about to change or not. Now, today, that briefcase, you know what it looks like? It's an iPad. But the point is the same. The Fed isn't showing all of its cards. I love the fact that Kevin Warsh is taking the bull by the horns, because if you remember back over the past 12 months where I've told you we can't continue to look in the rearview mirror, that data doesn't matter. The economy is real time nowadays. We've got to look at real time data. Hence, what I just said about the yen and the 40-year low, and they had to sell U.S. treasuries. That has an immediate impact. We can't look in the rearview mirror about what the yen did yesterday. We got to look at what it's doing today. So I'm glad that Kevin Warsh is doing that. As long as one thing happens, inflation remains under control, I believe we're going to be continuing to move in the right direction. Now, after 34 years again in the mortgage business, here's what I've learned. Markets have ups, they have downs, but guess what they always find? They find a happy medium, or in other words, a balance. So let me talk about where rates are today. Government-backed loans, VA, FHA, USDA, they're running around 5.875%. While conventional loans, they're a little closer to 7%, depending on the credit profile, the loan to value, and the other qualifying factors, property type, whether you're buying a primary residence or a second home or investment property, whatever. And one of the things I'll tell you is, how many times do I have to tell you to buy the house and not the rate? Because here's the problem. The cost of waiting is real. I just did an analysis for a group of realtors the other day. We used a $650,000 sales price. We used a moderate appreciation rate, which translated into about 12 months of about $40,000. If you don't buy the house now and the house goes up $40,000 in a year, that's almost $60 a month, just generally in your payment. But look at the interest and look at the interest rate, because you don't know what the interest rate is going to be then. Now, could be lower. I don't know. Doesn't matter. But if the house is higher, so interest rates change, the right home, the long-term wealth creation is what matters most. Guys, I'm going to tell you this. I started buying houses when I was in my 20s. My mother was in real estate. My grandmother was one of the very first Century 21 brokers in my market, and they taught me how to buy real estate. So I started buying houses. A lot of them I've sold over the past couple of years because they're over 30 years old. Some of them double, tripled, quadrupled in value. Some of them I still have, and I've modernized them. But I can tell you this, real estate always wins. It always wins, and it's what matters the most. So if you need me, call me, text me. Look, all around here is all my stuff. Ways to reach me. Go out there and friend me, find me, like me, whatever you got to do on all my social medias. But most importantly, tomorrow is August 1st. We're off to the races again. Hope you guys have a phenomenal weekend. And I'm going to remind you, I still need referrals. It was super slow this month. I didn't do the normal loan volume that I normally do. I was off by 40%. So if you got any friends, family, coworkers thinking of buying, building, renovating, refinancing, selling, whatever you need, I'm here to help you. Have a great weekend.